I ran an experiment that honestly shocked me. I gave $1,000 to AI and told it just one thing: trade the stock market for me. The rules were simple. For the next 7 days, I would not make a single trading decision. One account would be controlled entirely by AI. The other account would be traded by me. Same market, same capital, same time period. 7 days later, when I opened both accounts, the results were unbelievable. Let's start with the ground rules. Initial capital, $1,000. 2 completely separate accounts. 1, AI trading account. 2, my personal trading account. In the AI account, every decision was made by AI. What to buy, when to sell, how much risk to take. In my account, decisions were based on experience, intuition, and human judgment. No leverage, no options, only stocks and ETFs. And a quick disclaimer, this video is for educational and entertainment purposes only. I am not a financial advisor. In simple terms, AI trading means outsourcing decision-making to a system. AI analyzes price charts, technical indicators, historical patterns, and market behavior. It follows rules. No fear, no greed, no overconfidence. Human traders, on the other hand, often trade with emotions, and that difference changes everything. Day 1. I gave AI full context. Short-term experiment, high risk, high reward approach. AI suggested a mix of momentum stocks, high growth tech, and a few speculative positions. I executed every AI trade exactly as instructed. In my account, I chose stocks I followed on YouTube and social media. End of day 1, AI was slightly green. I was slightly red. Nothing dramatic. Day 2, the market moved sideways. AI stayed calm. Minimal adjustments. I started overthinking, and that's when the gap began. Days 3 and 4 brought chaos, high volatility, conflicting news, sharp price movements. AI reacted logically. It cut weak positions quickly and increased exposure to strong momentum. I reacted emotionally. I panic sold on dips. I chased prices higher out of fear of missing out. By the end of day 4, AI trading was around $3,000. My trading had dropped near $700. The difference was now impossible to ignore. By day 5, AI had identified a strong trend. It increased position sizes, kept stop losses tight, and followed price action closely. A few trades delivered massive gains. Meanwhile, I became cautious. After losses, I avoided risk. I missed the very moves that created the biggest profits. This was no longer AI versus me. This was discipline versus emotion. Finally, day 7, I opened both accounts. AI trading, $10,500, approximately 350% return. My trading, $1,250. AI didn't just make more money, it exposed every emotional mistake I made as a human trader. This experiment taught me 3 powerful lessons. Lesson 1, AI is not magic, but it is extremely disciplined. It doesn't overtrade. It doesn't revenge trade. It doesn't chase losses. Lesson 2, humans don't trade data. They trade emotions. Lesson 3, blindly following AI is also dangerous. AI is a tool. The best approach is human risk understanding combined with AI discipline and speed. And most importantly, never risk money you cannot afford to lose. If you found this AI versus human trading experiment interesting, and you want more content on the future of finance, AI-driven markets, and simple stock market explanations, subscribe to the channel and comment below, what should the next experiment be? AI versus a professional trader? Or AI-built long-term portfolios? This is Future Finance Lab. I'll see you in the next experiment.